So this is our fifth class. And is it the fifth? Yeah, we've done a lot. And I say we've done a lot. We've already explained the concept. See, the concept is different from the logic, right? Everything you've seen, I've said, I've shown you, you see it and it will fail you. So that's why it runs down to the logic that is behind your concept, how to avoid, how to take, right? I've told you how to get your storyline, how to identify key levels, simple thing, how to get your storyline, your direction. And I've explained that, okay, that your structure needs to be towards that direction you're trading, right? And I told you guys how to pick a key level. When there is an opposing key level, you need to be utmostly careful, except if the opposing key level is in a lower time frame. Then on a higher time frame, your storyline is like on the daily, and the opposing key level is like on the 4 hour. But if the opposing key level is on the daily, it can end your storyline. And you know, the end of the storyline is where it started, right? So it's actually very dangerous, right? Very, very what? Dangerous. So yeah, today it's we're going to be talking about structure and liquidity as a whole. So we're going to be blending together. We talk about structure and we talk about liquidity at the same time. So it's going to be an interesting topic and it's going to be an interesting class. So pay attention very well. I'm going to start from when you find out your direction of the market. Now, the whole ideology of this concept lies on the structure, the liquidity, and the key level. So next week, our class is going to start from the point of interest. So when we discuss point of interest, please immediately you come inside, mute yourself. Please, please. Right. So you will really understand where we come and we talk about key point of interest. After we talk about point of interest, I will teach breakup blocks, other blocks, and key level as what as point of interest. One number. Yeah, yeah. Tukuripi. I did a para class. So basically, a lot of things to talk about when we go deep inside. We're going to talk about how you use the Asian high and how you basically use a lot of ideas to trade, right? When we go inside and inside, that's why I say I'm going to make 5 different classes on putting all together. This is just, you know, the everything and everything. When we come to putting all together, I want to do 5 pure classes. So now, structure and liquidity. Basically, we talk about how to build your storyline. So you can have any type of storyline, any type of storyline. Now let's say we have the let's talk about the CRT or any type of storyline. Sure. Let's say we have 2 daily key levels. I love the daily the most, so that's why I use daily as example the most. Now let's say the market is downtrending like this, then the market now hits that key level. Now when the market hits that key level and give us a break of this high. Now when the market breaks this high, on the 4 hour. Now this line is a daily key level. Don't forget. Let me just put it now. And then we have this break right here in the 4 hour time frame. So normally or usually, not always, an A plus setup can be that type 1 is going to form around this key level, right? Type 1 structure is going to form around this key level. Market do something like this. Now, if type 1 structure forms around this key level, then you're safe, right? You can trade it like this, and then you buy until the next daily key level. Now, any type of structure can happen around this key level. Around this key level, when type 3 structure happens, what I mean is the market breaks the high right here. After breaking the high right here, the market did not mitigate this zone, and then the market continue upwards. Then you're going to trade here, right? You're not going to be waiting for type 1 setup. So it depends on what you get or the type of setup you get. Then that's what you're going to trade. What you get is what you are going to trade. After your break, listen attentively. You can have type 1 structure, type 2 structure, type 3, or anything. Now, pay attention to what I'm going to tell you. If the market comes back to this zone, take out this inducement right here, and then the market comes down. Now, When the market comes down the next time, the market is likely going to come to either this QM, depending on how the market mitigate this zone. And the market is still bullish. The market can come. And this time around, this your mitigation of this RBBS is going to build liquidity. Put it at the back of your mind that whenever the market mitigates an RBBS or an SBBR for your entry in form of a breakup block, then that places liquidity for the market to come back to another zone to buy from. Right? Now, after the tap of this daily key level, you can have a 4-hour candlestick structure that I explained yesterday. 4-hour candlestick structure, you can also trade it, right? For when you have a 4-hour key level, if this is a 4-hour key level, you can have a 1-hour candlestick structure. You can trade it. Okay, so now the information here is, now let's say the market give us a break and everything, and the market did not give us any liquidity. Let's say the market just came, give us a break, and the market did not give us any liquidity right here. How do we trade it? If the market did not give us any liquidity, automatically you execute from the apex. You don't need anything. On the 4-hour, you look at the apex, refine it to the 1-hour, then you just put your limit order at the apex. If there is no liquidity and you buy from it, it's also an A+ setup. No stress. Execute from the apex. It can take you out. Stop loss is part of the game, but when we start explaining the logic behind the setup, you really understand it, right? Okay, now liquidity and structure. If you have your direction, you focus on structure next. So we're going to build a lot of storylines today, and we're going to look forward how we combine it with structure and liquidity, right? First of all, we've discussed storyline as our second class. Let's quickly go back a little. I don't know the pair to use, but let me just use anyone. Let me use EU. Let me use EU, Euro USD. Now, this is the daily time frame on Euro USD, and we'll find a day to build a bias. Now, you don't need to have a bias every day. Even if it is once a week that you have a bias that comes with an entry in one pair is okay. You can come 5 days, you don't know where the pair is going to. It is fine. It is fine. You don't have to stress yourself, please. It is fine if you don't know where the pair is going to. Wallah, it's fine. How many of you have asked me a question? I'll be like, how do I say this? What do I say? I don't have a direction yet. I'm patient. I'm very patient to say, okay, I don't know where the market is going to today. I have to wait until I see that thing I know. Immediately I see that thing I know. Boom. Boom. I'm inside. Okay, now let's see how we do this. Now, or let's use the 4-hour chart. We can try and use the 4-hour, but the daily is the best. I'll say it everywhere. We can use the 4-hour, but daily is what is the best. There is no one rich daily that you use and build the bias and it will go correctly how you want it to go. The 4-hour can fail you a lot of times, not like what the daily is going to do. But still, let's use the 4-hour. Let's look at the 4-hour chart and what the 4-hour chart is doing. Okay, let's try and use this. Let's say there was a rejection from here. Okay, let's say there was a rejection from here now. If you look at the rejection from this key level, the massive rejection, this is where that candle closed. You always need to wait for the candle to close before you check your 1-hour break. You must wait for that 4-hour candle that rejected to close, this 4-hour candle, before you wait for your 4-hour break. Now, after the rejection, look at where the candle closed. You quickly go to your 1-hour chart. And when you go to your 1-hour chart, you're going to be looking for your break. Now, let's pay attention to the 1-hour. You're going to be looking for your break. This is where the rejection happened, and the market closed above this. So automatically we have what? A break. Now we have a break around here. We've built a storyline that we are what? We are bullish. Now I'll go back to the 4-hour and I'll look forward to where possibly is my storyline going to what? End. Now my storyline is likely going to end around what? Here, because or not here, let's say here. This is the next 4-hour key level that I will put my take profit placement if you want the closest external liquidity, because we use internal liquidity as liquidities for entry. The market need to take out our internal liquidity, then we target external liquidity. Or you can target the next key level on the same time frame you build your bias where the market is going to end. Now, what did I just do? I have built a bias that I knew that, okay, the market is going to take out this high. Now, quickly, what I'm going to do, I will go quickly to the what? 1 hour time frame again. Now, when you come to the 1 hour time frame, what do you do right here? You have a break. Now you have a direction. You don't need key level anymore. Delete key level from your brain. You have everything you need. Okay, this is now my target, or this my exit point. Now, the next thing you're going to be focusing on is, you know that you are bullish until the market take out this high, except if you have an opposing key level that is going to reject the market on the 4 hour chart or something like that. On the 1 hour right now, like this, from what you're seeing, if you want to trade a structure, look, this particularly is a break of structure right here, right? And this pullback here is an inducement right here. This is an inducement because we have a break of structure, and this is the first pullback after the break of structure. Now, if you're studying structure very well, for me, I'll scale back to the lower time frame a little bit again. When I come to the lower time frame, because what am I doing now? I'm looking for the exact point where I'm going to enter from based on structure, right? I found my liquidity, I found my direction, I found where the liquidity is. I'll look for exact place where I'm going to enter until the market hits this zone. Now, I entered off of the 15 minutes time frame on this zone. That explanation is going to come later, but I would explain how the actual entry is supposed to be. Now, scaling down to the 30 minutes time frame. Now, look at where your entry is supposed to come from. Where is your entry supposed to come from? Look at this support break. This is a resistance that got broken and become support, which is fresh. Now, I will add the topic entry to this structure and liquidity. Let's talk about entry a little bit, so you guys will understand what we're talking about. So whenever I want to enter the market, regardless of structure and liquidity, I've compiled 4 rules I use for my entry. So the first one is a break of structure. There must be a break of structure. So, and you know, as far as there is a break, right, we will automatically have a break of structure. The second one is the inducement or liquidity. So I can call it inducement or liquidity. And you know, inducement is the first pullback after break of structure. The second one is pure I, that is what, sorry, let's say key level that is closest to what? To the liquidity. And then finally, we have key level that must be unmitigated. Now, some people from their experience, a couple of students are telling me sometimes the market doesn't respect key level closest to liquidity. I don't really know. But when we come to KLR and we discuss KLR, you will notice how you pick sometimes your liquidity. And we'll talk about a little bit about SLP also. So these are my 4 rules, meaning if you pay attention, you need to have a break of structure. You see right here, what do we have? A break of structure. When you have a break of structure, you need an inducement. So you need to wait for the market to pull back. That is after you've generated your bias. After the inducement, now this is your inducement. Then you have key level closest to liquidity. Sometimes you can have 2 or 3 key levels, but the one that is closest to this liquidity is the one you're going to pick, right? When you pick it, then the key level must be unmitigated. It needs to be fresh. Then you enter off of what? This zone. That's how it is. Now, if the market has not mitigated this low right here, which is RBBS or SBBR, then this one is going to be your key level that is closest to liquidity, and that's why you enter from this place, right? Then this one is going to be your liquidity, right? Now, if you want to now enter from this place again, this place will now become your new liquidity, and then you now enter from the last zone again where you're going to be buying from. And you see at the end, it all forms structure. So these rules are strictly based on the structure and liquidity concepts. Now let's get back to the charts. That's our entry. All right, let's get back to this place. Now, pay attention to what's happening here. Let's talk about the structure strictly. A break of structure occurred here. Now, look at the chart. Look at the line chart as always. This is where the break of structure occurred. Look at the break of structure. Boom, right here. Let me use this as I always use, the break of structure. Now, let's go back. This is 30 minutes. And look at what? This is the inducement right here. This is the inducement. Market took it out. And then tag us in. And then the market fly what? Straight to take profit. You can take profit here or here. All is okay. Why? Because you have a 4-hour bias. So you need to be very careful. So standard stop loss, I will teach you how to play stop loss if you have this type. Okay. That if it's this type, me basically I will decide to place my stop loss right here. I will talk about that when we come to stop loss placement, right? Something like this, and then you target this high. It's okay. 5R is very okay, right? And also, I always break even my trade. I break even if I have 1:2. So you can see the first tag, did it go to 1:2? I don't know, but I would likely hardly break even these traders early, then straight to take profits. Boom. It's okay. Very okay. Okay. So After you have your bias, understand your structure and liquidity, then you use these 4 rules to look for the best entry, right? Let's go again. Let's try gold this time. Oh, I have all this. I have all this. I have all this. Oh, let me delete all this. These ones are gone. We don't chop the money already. So now this gold also, I'll still use the 4 hour, but you guys, I prefer daily. I'll say it anywhere and everywhere. Let's look at the 4 hour chart now. Let's look at the 4 hour chart. Um, where should I check? Um, 4 hour, 4 hour, 4 hour. Okay, let's try and use this. Or basically, don't worry, let's use this again. This is the daily chart, and I saw this already. This was CRT formation of the candle. Now, this candle created the CRT, and this is where our take profit is going to be. After the closure of this candle, all we need to do is to go to the 4 hour after the closure and look for a break. Now, there was a type 2 break here, which is the one that the market has already tapped and give us a break above this zone. So the market break above here, and this is where we have our break. Literally, I use the break because I know gold is extremely bullish, but it's not an A plus break, right? This is where the break happened. So after that break, what do? You pay attention to structure and liquidity based on those 4 rules. Now you can scale a little bit lower time frame and you start studying structure and what liquidity. Now I started looking for a break of structure after the break. Listen attentively. This is where the break happened when the market closed above what this zone. The break has happened. Now, after the break has happened right here, I went straight to the 1 hour time frame. When I came to the 1 hour time frame, I have a break and the market continuously started moving and moving and moving. Now, why I said trading is a game of critical thinking is that inside this my daily everything and everything, inside this daily CRT, I was looking forward to, I'll explain exactly how I took that trade. I was looking forward to this zone. I was waiting for this zone to get rejected. I promise you. After this zone got rejected, listen attentively. After this zone got rejected, I quickly went to my 1 hour. After the 1 hour, it got rejected here and broke. Look at the break, bro. It break above here. After the break above here, what did I see? Pure, clean, beautiful candlestick structure. How? Oh, doctor, how did you get this candlestick structure? Okay, now an open close on the higher time frame is a RBBS on the lower time frame. No, listen. An open close on the higher time frame, it's an RBBS or SBBR on the lower time frame. So what are my rules? A break of structure above here. Go to the line chart, see it clearly. I have a break of structure. Now, the first pullback after that break of structure is this one, right? Now, key level closest to liquidity, which is this, and the key level that is unmitigated, this one. My 4 rules are complete. My direction is complete. So I have a 4 hour small storyline inside a daily bullish complete storyline. So this is your overall take profit. And this is your small thing that happened inside. So I now went to the 15 minutes time frame and I saw how clean it looked on the 15 minutes time frame. Why? Remember, doctor told you that an open close on the higher time frame is what? An SPPR on the lower time frame. Additionally, our next class is key level on a Friday next week. This is a breakup block. Our next class is point of interest, so I'll teach you this. It is a beautiful A plus 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 breakup block. So that is why I executed from here. This was the rejection. Boom. And then where was the stop loss? Just below here. Boom. Stop loss placement, remember? If it's RPPS or SBPR below the fair value gap, because when we come to our next class, or when you're trading SBPR or RBPS, there must be a key level. There must be a fair value gap overlapping inside your sorry. Yeah, there must be a fair value gap across your key level. If there is no fair value gap, then bro, it's low probability, man. Then the rejection happened here. Now, this is where the rejection happened. The stop loss here. Exact trade I took. Did I change anything? No. Exact trade. Why did I say trading involve critical thinking now? It's basically because these are the 4 rules you're going to be using for entry, all of you. Basically, because trading involves critical thinking because I had a daily storyline, but I built a little 4 hour storyline inside A very beautiful small 4 hour storyline. And I was not worried about the opposing 4 hour key levels that were here and here. Why? Because daily has already told me my target, right? So anything on the 4 hour, it's only the bullish one that I'm expecting the markets to respect. And this was an A plus setup I waited for. And it happened. Boom. How many percent did you make? I made over 7K. Beautiful, right? Now, let's go again. Let's check another one. So what you do basically is, I don't use 4 hour CRT for your information, please. The CRT I use is only on the daily or on the weekly, right? I don't use 4 hour CRT. Let's break down more about structure and key levels. I don't know where I can find one, because basically this week I've been trading gold and gold and gold. Yeah, all my trades were gold. Right? Okay, let's check like USD card. We can find something. Oh, beautiful. I think this is the 4 hour chart on USD card. Just look at it. Oh, oh, oh. Let's look at the daily. Let me look at the weekly. What the weekly was saying. Let's look at the daily. Can't find anything on the daily. But okay. Let's look at the 4 hour then. The daily is not even clear to me, so let's look at the 4 hour and see. Okay, let's look at something. Can't see nothing interesting. Nothing. Nothing. Let's look at GBPJPY. Yeah, let's look at GBPJPY. I saw something last week. Yeah, I saw something last week. So let's look at the daily charts. I did not trade, but I saw something. I don't know whether it worked out. Let's check it out together. Now, what happened last week, and one of the things is USDJPY was just consolidating, but I was not worried about the consolidation sincerely. I basically had a move I was expecting on GBPJPY. Now, this bullish move that started right here, let's pay attention to it in form of this CRT. This candle that closed gave us the CRT, and on CRT we expect the market to take out the high, which means if you look forward to this replay button, you will notice that okay, this was it before it happened, right? This was it before it happened. Now, what I want you guys to be wise about is the market came into this key level, right? Tapped on this key level, took out this liquidity here, making it high probability, right? Making it high probability. Now, after everything had happened, take out liquidity, tapped on this, give us the rejection in form of CRT, the candle closure. And why me? Basically, I'm not expecting this key level to hold because it's telling me the story that this is the next target of the market. Now, am I going to be targeting here? No, bro. Why? Because all these are weeks. There is nothing I'm expecting the market to hold the price. Now, my target is going to be basically here. That's where my next TP is going to be. Take profit placement. That's why sometimes you see us catching high RR. We are not wise. We are not wiser than you guys, right? So I can bring back everything. Now, after the everything, market took out liquidity, taps on this key level, give us CRT. Then we need to confirm on the 4 hour, right? We need to make sure that there is a break. Now, after everything, we have a break above here. Look at it. We have a break. So I'll cancel everything. All I'm going to leave here is my what? Target. This is my first target, first TP, and this was my what? My second TP before the market just come here. Now we have a break above here. We study the break very well. Immediately after the break, we start getting interested in what the market is going to do. Now, let's zoom in and see something. See something now. This place is where the break happened. This candle formed the break. Immediately after the break, look at the way the market came back into this what resistance break becomes support, taps and what buys. Now, immediately after this tap, you can, I'm talking about thinking, you can create a 4 hour storyline to go for the daily storyline target. I don't know if you guys are getting me. Why did I say so? From my experience, from my experience, I promise you, sorry, I'm promising, but yeah, I promise you, this market has already mitigated this key level. The market has used this key level. The market is not coming back to this key level now. Lie gone. Not now, man. Not now. The market is going for this target. So immediately the market taps on this 4 hour key level. You can create a short time 1 hour bullish key level. 4 hours storyline inside here. Let's go to the 1 hour quickly. Now we are now starting to think about what our entry. How do we enter? Which idea do we use for entry? blah, 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 blah. We already have what? A daily storyline, meaning we are bullish on the daily. Now, what are we looking forward to? What are we thinking of? Right? Now, let's use our brains. This is the 1 hour chart. This is the 1 hour chart, please. And the market taps on this key level right here. We don't have any initial break or anything. I'll come back to the 4 hour. Why am I bullish on the 4 hour? I just want the market to give me a 4 hour touch and a break. Why? It's an idea which I'm creating for you guys to understand that when you have a daily storyline, all you need, you have a target. Boom. Then you can create a 4 hour short-term storyline and you place your stop loss and you go for the daily target. Boom. If you want, you can anything. You just need to think. You need to learn how to think. Right. The next thing that happened is the market also came back into this 4 hour key level. I did not give up. The market came back into this 4 hour key level. Right. I'll start buying. I'll start looking for buys. I'll start looking for a 1 hour break. Sorry. Then come back to the 1 hour. Where did the market tap? The market came back into this. This time around, did the market give us a break? Yes, the market gave us a break above this zone. Now, immediately, listen to me, immediately the market gives us this break above this zone. I don't need the 1 hour anymore. I have the break. I can go as low as the 30 minutes to look for an entry, which I understand all I need. I'm going to be following my rules and I'm going to be executing off of that entry to just continue the buys. Okay, so actually I kept following up the market. And I couldn't find an entry until the market hit my target. I intentionally broke down this trade to tell you guys that, okay, there are circumstances that you have the storyline and you don't even have the trade. I kept on following the market, but I will teach you now something when it comes forward. You see this? You see this? You see this type of one candle with a big fair value gap? A candle, this candle, which is in form of an order block with this big fair value gap. This is the type of 3 candle entry I sent in my Telegram channel the other day. This candle with the 3 fair value gap, this is your entry. Boom. If you don't trust it, you wait for the confirmation entry here. Boom. It did not went up. We'll talk about all this. We'll talk about them. Okay. But now you understand the storyline was bullish and we couldn't find the entry. But my assignment today now, it's a practice for you guys. This particular candle, you can enter from the tip of the candle and put your stop loss 3 pips below that candle, like this. 3 pips like this. The market is not going to hit. Okay, if you don't trust it, I'll show you another entry that's happened like this, or you can enter from the low. On gold recently again. Where was that? Oh, I can't find it, doctor. Look at the one candle here, which is very small. Right? Look at it. Boom. Look at the big fair value gap and the opposing candle. We'll talk about that and I'll teach you how to place the stop loss and everything. Right? What's it all about? Establish your storyline, go for your direction. Let's enter US oil and try to see if we have anything on US oil. Now, this US oil, and this is boom, the 4 hour. Let's go to the daily. Right. I can't find anything on the daily, but this is the 4 hour key level. Let's discuss on the 4 hour if you can have anything. This zone. No. All right, let's try this zone. Let's try this zone. So now basically, if you look at this zone, what's happening right here on this zone is that we have a daily reject daily inside this open close, right? After the rejection, we're going to be expecting the market to hit this high, right? That's our target. So quickly we go to the 4 hour time frame. If we come to the 4 hour time frame, we're going to be looking for a break. Now after the market taps, we have a break around we're going to be having a break around this particular high. If you pay attention, this is where the market had give us a break, right? After the break, we also don't have any entry until the market go as high as possible. So that's why I say you can scale as low as the 30 minutes time frame to use your 3 rules and look for that entry. But the market just kept on pushing and pushing and pushing until the market hits take profit. But when we learn KLR, it's not all this move that you wait. You can enter aggressively from some zones. From the higher time frame, basically, you can just look for the entry and you're going to join the market. What I mean is that from here, boom, you're going to enter so many zones that you don't need to abandon. This one, enter aggressively, you miss entry. That's why I teach you how to enter like this. Boom. You're not going to miss this sell. We'll talk about all those ones when we go into the topic to talk about them, right? So basically, today's topic is about how you get your bias and then how until you get to the what entry, right? So let's check USD CHF. Let's look at the daily charts. So on the daily charts on USD CHF, let's see. Let's see. We'll try to build an idea for like this one. Let's see. We'll have a 4-hour break, right? 4-hour key level, respect, and the storyline ended here on the same day. So it's not interesting. It's not interesting. I don't have anything interesting. Right? Let's check the 4-hour. Or let me check the weekly. Let me check the weekly. All right, we have a storyline that's on the weekly last week on USD CHF right here. Beautiful. You can see the stop last 2 weeks, the first stop right here. So quickly we'll go to the daily chart. When we come to the daily chart,
Doctor,
who is talking?
ni ne Umar ne. Idan aka samu wannan sweep a the same time frame sai kuma aka samu break din ba zai zama valid ba?
The thing is that the first thing is that when the market taps on any zone, when the market taps on any zone, you need to wait for the candle that tapped on that zone to close. When you wait for the candle to close, that's when you start making decisions. See, waiting for candle closure is what I do best. Me, I'll wait for candle closure, it will disappoint me, and it's cool. I'll wait for another candle. Okay, in case I'm sweep, Musadi, if you have a sweep, so you have to make sure that that break is on the same time frame you have that sweep. Okay, I think that's answered your question. So basically what I'm talking about today is that whenever you have a key level, we've started creating idea, and then the market comes, taps, and breaks. After the market breaks, then you pay attention to any structure that is going to form. The structure can be type 1, type 2, or type 3. So if it's type 3, you follow the rule. Just follow the 3 rules, which says a break of structure. The break of structure is here. The first pullback after the break of structure inducement. Then the key level closest to that liquidity, it can be this one safe, but I don't trade QMs. So key level closest to this liquidity and the key level that is what? Unmitigated. This one has been mitigated. Okay, this one has been mitigated. So you're not going to use this anymore. So what you're going to do is you're going to sell from this one. So this is basically structure and liquidity. Right? If this one is not mitigated, then you use this one. If this one self has been mitigated, then what do? You use the extreme A-shaped key level on the extreme. Right? So, but if you come to in-depth study of structure, like I said, you can trade structure alone. You don't need key levels. This Ibrahim Bulama is trying it very well and it's working. Structure alone. I only used to tell you guys that if you want to trade this particular pattern, trade it at the extreme. If you are trading here at the middle of the chart, then you can be in trouble, right? You can be in very big trouble. Now, this is basically today. This is going to be our today's class. So trying to blend everything together, how it has been, yeah. Let's check a couple of more examples. Let's say this. When the market came into this key level, rejected twice, 3 times, 4 times from that key level. But let's check the 4-hour. Do we have a break? Now the market came into the key level continuously. Let's say we have a break just below here. The market break below, right? Type 2. The market breaks below this zone. Quickly we go to the 1-hour. When I come to the 1-hour, I'm not doing anything. Where did that break happen? Check 4-hour again. Okay, below here. Let me extend it so I'll see it very well. Right. This is where after this candle have closed below, this is where the break happened. So quickly, what we do? We start studying structure. After this rundown, we start studying structure. What am I paying attention to? The break of structure, the first pullback after that break of structure, key level closest to liquidity, and the key level that is unmitigated. Anywhere from here forward, that's what I'm going to be checking. Minimum time frame 30. You can go as low as 15, but I don't like 15. I'll say it everywhere. So I've seen something interesting, which is what I trade with fair value gaps inclusive in my concept. So you can see, what do we have here? A break of structure. Now, after this break of structure, I have this liquidity right here. After this liquidity, if you want to pick the key level that is closest to this liquidity, has this one been mitigated? No, you sell from here. Simple. Yeah. What did I do? I created the idea of the trading. I used logic and I have the direction and I trade based on the logic. Okay, now where are you going to be closing out of this trade? You have the key level and everything. This is where your take profit is going to be because this is the next daily key level. Now you come to the 1 hour time frame, or where do you enter from? 30 minutes. You come. Use this idea back to back. I don't like trading open close levels, but this open close has been disrespected. So it can be reused again, right? I thought I made that explanation in the first class. This is where our take profit is going to be. Now the market came back. You sold from here, right from here. Place your stop loss. If you want to use the rule, you can use this as your stop loss. Or you can go to the 15 minutes to try and minimize the size of your stop loss. The same place. You place it that way. Why? Because you are using the rule. You're using what you know. That's it. You place your stop loss here. For me, I delete everything. I leave only the line that I'm using to enter the market. This one, boom. This. Now look at it on the 15 minutes chart. If I refine to 15 minutes, I'll end up using this key level. And the market did not come there. Did the market come? No. The market did not come. But I used the 30 minutes. That's why I love using the higher time frame. And it told me that this is the key level that's closest to this liquidity. The market came into it with proper stop loss placement and everything. Boom, take profit hit. All the time, you guys feel like it's magic that my entries are so sniper like this. See, if any candle close inside this red place, I will hit stop loss. I know, candle body. But if the market taps and rejects, I know I'm going to hit my take profit. That is how to blend structure, liquidity, and your direction. For the last time, I'll break the same NZDJPY and quickly we'll end the class for today. Remember, the market came into this daily key level. After the market gets into this daily key level, I went to the 4 hour. After I came to the 4 hour, I waited for the break. The market did this nonsense here, did not give me a break until the market came here and broke below this zone. After the break below this zone, I went to the 1 hour. What was I looking for? Structure and liquidity. But it has to be based on what? I did not say anything on the 4 hour, 1 hour, so I went to the 30 minutes. When I came to the 30 minutes, I looked forward. A break of structure. It happened below here. The first pullback after that break of structure. My second rule, which is this inducement. Now, key level closest to this inducement is this, and the key level that is unmitigated is also this. It has been not been mitigated, and it is overlapping inside what? An imbalance, A plus entry. Then I entered from this zone and take profit hit. Simple. If you practice this consistently, just this without our other classes, and you do it correctly, if you are not profitable, me, gone, 1K dollars. We'll send and go enter your Bible. So thank you all for attending today's class. Our class has ended. Ask your questions if you have. And yeah, all the best.